today's show, I'm receiving Sebastian Heitmann, the co-founder and general partner of Extantia, a European climate tech fund based out of Berlin. We speak about his journey from kite surfing to climate tech. We speak about his general rules of thumb of detecting great companies on the hardware side, the exclusion zone, the inclusion zone, the fundraising, and maybe the limits of institutional capital, who should welcome institutional money or not, and the future of Super Climate, the leading climate tech event in Berlin that is now going international. And we have a few announcements at the end of this recording. I hope you enjoyed as much as I did. See you there. Sebastian, welcome to Climate Insiders.
Thank you, Joan. Thanks for having me.
It's an honor to have you. And for people that don't know you or your fund, could you maybe just introduce your fund, your scope, and the kind of ins and outs of Extantia?
Happily. Of course. So we founded Extantia in 2019 or 2018, sort of at the idea, 2019, eventually sort of started really working on it. Background, actually, all of us been exposed to the world of clean tech 1.0, energy investing in one way or the other. Some more in a professional manner as a consultant, others as a LP to other funds working the space, or as angel investors. So we've been watching the space for some time, and we saw Paris Agreement come along, saw a really interesting macroeconomic framework appearing. Of course, we also saw the movements on the political side with the ESG or the taxonomy topics coming to life, to categorize how we invest in the future. So we thought this is actually interesting momentum to do something. We had one of our current GPs, IRM. He had a sort of front row seat in creating breakthrough energy ventures, and also took quite a few learnings on how to build a fund in that space. So all of that thrown to a pot, we saw what's happening. We knew that we need to do something on the front, that capital is what's required in the market. I always say that personally, the last thing I wanted to do is actually financial product in my life. I was probably a bit more like usual, also on the entrepreneurial route, looking for solutions to bring to market myself, but lacking maybe your background, also lacking some technical background. I had to find out that maybe financial product is the one thing I can add most value to. So we decided to set up a first small vehicle to prove kind of our thesis with our first vehicle, the pledge fund, in 2020.
Yeah, and I definitely want to dive into that, your strategy to warehouse and then full-blown fund. But before that, I'm interested in your personal background, because you have a bit of an unusual one. It all started from the world of kite surfing.
Before that, yes, there's also a world that I was part of. Background economics, quite boring. Did economics degree. Ended up working. Then we actually, straight out of university, we kind of co-founded a company that we in software space, which was then sold in the mid 2000s. That's when I initially went on for an interim year to work for a US PE fund that was acquired this water sports company. So I went there, did that for some time. That interim stayed for a very long time. In that time, though, I was actually already starting to do my clean tech journey. Started back then. It's like we talk about the years like 2006-07 here roughly. And sort of with private money investing into pre-IPO, IPO opportunities at the time in the clean tech world, paid my tuition fee, for sure. That was not always pretty. It was pretty in the beginning, but it didn't end pretty. So the fair share of insolvencies, but still couldn't be cured from kind of the intriguing part that technology will play in these sectors to really transform them. And then, like I said, then things came along with Paris and taxonomy and things. We said, okay, this is really developing into a very interesting future market, and this is something that's just also very much needed. We need the entrepreneurial expertise. We need to help this generation of different founders with different capital than there was out there till now. We've learned this firsthand as well. I've done angel investments after 2015 as well in companies that I thought are amazing breakthrough companies. However, my address book for follow-on investors was so thin. Nobody wanted to invest into hardware at that time. So it was very tough for the entrepreneurs to have access to capital. There was quite a bit of capital in the early stages and the stage where you have a lot of university or institution grants or non-dilutive sort of financing. That was okay. Then there was a long valley until you finally become kind of a bankable product. And that sort of, yeah, there was no venture capital actually at all going to the space. Some corporates have always been in that space, but very different mindset at the end of the day. So we wanted to make sure that a market is created, a asset class is created where the institutional capital can invest with a good conscience. Yeah, that this is return-driven, profitable companies, just another asset class like we've done with the internet or digitalization asset class. So this was our goal, really, to create a new asset class.
But it didn't start it as crisp, back then when we met the first time, 2019 roughly.
Yeah,
You were still heavily involved on the kite surfing side. Maybe I'm kind of curious. So you're the founder of Founders Kite Club, one of the co-founders, and I'm
yeah.
curious about that bridge between the kite world and climate. Was How did the genesis of this idea kind of emerge, and yeah, how did you operate the transition?
First of all, Founders Kite Club is a hobby, right? It's not a for-profit thing. It's a hobby. It's a community of entrepreneurs and investors that's been running quite successfully. It's been 11 years now, about 700 members in the club, so quite a few people
No?
there. But it's always been the character has been always been the community. Yeah, it's a community effort, community led effort, and also the spirit unites us for sure. The spirit is about pioneering, yeah? And entrepreneurship and of course the sportsmanship as well. I think these are good values, yeah, that play along in the entire life, personal life of one, and Founders Kite Club is just a great catalyzer for these, yeah. But it didn't necessarily lead to the conclusion to do a clean tech or a climate tech. There wasn't even a word for it when we started. So you know that we met very early on.
Yes.
um, yeah, very beginning. So yeah, we're thinking about, is there a market? We weren't sure either. With a couple of interesting people or interested people, interesting and interested people, but I wasn't sure. So that's also why the first fund we said, hey, let's do a 1 year vehicle. We didn't want to go out with a deck and just fundraise for years. Yeah, to be honest, we've seen some other funds. EIP was out there already. Obviously, BEV was out there already. But that was on the US side and with very different structures. I mean, back then at least, BEV was kind of a billionaires club, and EIP always had its very different focus on the corporates and that's also where they came from. So that was not very comparable to what we were trying to achieve. And also, we didn't have the address book of Bill Gates, so the billionaires club was not in reach for us.
But you did have
So
a community of kite surfers, and I keep hearing that it's the best networking ever. Especially if you get high net worth individuals committed to the climate scene. Is that true?
yes, I mean certainly there are some very interesting people in the club, but and of course in the club we've discussed the topics as well. Yeah, I mean of course over the years we've interested people discussing the topics of climate change and how to avert it, what solutions are out there. Different schools of thought there for sure. I mean as well, we have a lot of very
Hmm.
controversial discussions about how solutions can really look like on the technical level, but also the whole discussion, is technology the answer, or do we actually need to adapt and prepare for significant degrowth, or it's very open format, yeah, and all types of thoughts are welcome. So for sure it shaped my thinking about that and shaped sort of also the conclusions. I mean of course it played a role. I mean it's been an essential part of my life since 2011. So it would be foolish to say it
Yeah.
did not play a role. Yeah.
And so you mentioned that early on it was a 1 year kind of a vehicle that you structured. So Extantia, from the other funds that have started along the same lines, and full blown climate tech vehicles, Article 9, targeting institutional capital. You had a different strategy of finding early backers, warehousing deals, and then structuring a full blown fund later on. In hindsight, was this the right strategy?
It's also something I've been discussing with the other fund colleagues for some time. I think it gave us a certain advantage that it showed that as a team we can work together. That we actually a team that has executed on some deals. In terms of an actual track record that an institutional investor would like to see, it's discarded. Nobody. I mean, there's no exits. It's too small. It's too few deals. You're not in a lead position, and I mean, there's a lot of reasons why they would discard it. But there's also some points which they would value. Yeah? We've done some pioneering work there too on measuring impact, on how to compensate impact. So with our EPIC methodology, so there has been some things. But for us internally, why we did it was, like I mentioned earlier on, we did not feel like just going out with a deck is what we want to do. We're also, most of us are really entrepreneurs at heart, and we're also anxious of doing deals. We didn't want to wait, for 2 years until we finally do a deal. So there was not actually officially a warehousing. This is its own fund vehicle, which had a 1-year deployment period, but it didn't warehouse for the later fund. That maybe sometimes can be a bit of a disadvantage, because of course now some of the companies in that fund actually are working quite well, and we don't have them in our fund, and we also can't invest in them again, because the cross investing between two funds is typically not seen so well. You can do it, but we haven't even tried, to be honest. We just said, okay, let's keep it clean.
All right. And so you mentioned topics that fund managers discuss all the time. One of them is fundraising and the limits to institutional capital. So, I mean, this is in this audience, so this is a free speech. Obviously, we kind of have to keep an eye on LPs, because fundraising is never ending when you're a fund manager. But there's also a few truths that we should spread, right? So, institutional capital is not easy. It requires things that don't necessarily align with the venture interest. So I would love to hear your thoughts on all this and maybe help move the needle a little bit.
Yeah, absolutely. I mean, it was our declared goal to create this new asset class of climate tech in order to allow institutional capital to invest into it. For us, it was obvious that this is the solution. I mean, institutional capital makes up 80% of global capital or something. So, insurance and pension funds, that's typically the people you need trying to mobilize. And I think the taxonomy helped here, that there is a classification, and we see that there is quite a bit of movement, that these institutional capital is building out pockets from which they can invest. And typically there is an Article 8 or 9 pocket, or not typically, but more and more are building up these pockets. And once you sort of have that categorization, the conversation is already quite a different one than if you're just trying to appeal to some type of impact pocket or something they might or might not have. There's quite a few of them who actually had that earlier on. Some actually have. We've seen some institutional investors who've been investing into these topics for quite some time, surprisingly, since even before 2015. So there has been also something before. But maybe that's a bit of a differentiation I would like to make as well. Previously, there was a lot of sort of impact investing, where the impact is the primary metric. We always say we don't invest for impact, but we invest with impact. So for us, actually, the financial performance is the number one metric. Kind of comes out of the logic that we say nothing that will really be impactful can scale unless it's extremely profitable. So any solution that's going to bring really large impact automatically has to be a very profitable solution. I mean, we define this in numbers. In our fund, we say 100 megatons of CO2 reduction per technology per annum. That's huge, that's gigantic. In order for one company to attribute 100 megatons of CO2 abatement or removal, you have to be an extremely efficient business. So one thing kind of is very much related to the other. It's not either or, at least for us. So what it does leave aside is sort of we focus very much heavily on the CO2 reduction. Of course, there's many other factors that are also of importance. And of course, we are an Article 9 fund, and so we have to adhere to all the other ESG practices as well. But it's not our primary metric under which we sort of look into a deal. But of course, under Article 9, we are quite constrained. But to your original point a bit, what are the complications of dealing with these institutional investors? How do we mobilize them? I said the taxonomy is good; it helps to sort of create these pockets. There's also, of course, drive from the teachers or whoever's pension they're administrating to actually do something. That's also some pressure, or the doctor's pension plan, or whatever it is. So there is a certain drive in that direction from the asset owners to do something. However, it's a very conservative world that doesn't move fast, yeah, and typically has a lot of boxes to tick, which frankly none of us really ticks. Yeah? In the climate tech world, there is so you always need a certain level of trust from these people that they think you can do this. Yeah, because based on pure metrics, I think we would all disqualify.
Would you say that their angle of the way they filter out teams and they look at projects is from a risk angle? So there's all this long tick boxes checklist. We need to fill all those boxes because we need to minimize risk from their perspective, and not because that's how we maximize the opportunity for them.
Yeah, for sure. It's often this way. I mean, I always try to put myself in the shoes on the other side. If I had to sort of allocate the money, and we are doing this as well. As you know, we also run a small fund of funds, so we are also LPs of the funds, and then we are on the other side of the table where we need to see, do we trust this team? However, our thinking is way more advanced in this way. Our mind is set. We know what we're looking for, what type of team we're looking for, and then and the geography and the stage and stuff. So we were kind of set already. But if you're completely new to this and you previously have done very, very different funds, yeah, you are, as always, as with all corporates, there is a certain cover my ass attitude. Yeah. People are not rewarded for taking any risk. Yeah, I think that's big part of the problem. There's no gain for them to have to take a leap of faith.
Mhm.
There's also no regulation pushing in that direction. Yeah, that they have to do certain allocation into Article 8 or 9 funds, for example. So yeah, that makes it significantly harder to convince them.
That's interesting because if you look at the Extantia fund of funds, you're probably over indexing or indexing a lot your decisions on mindset, on the entrepreneurial, side of things, but also on the narratives. And a lot of it is tell us the vision of your fund. How do you differentiate? How is this vehicle? Why does it need to exist? Why should I invest in that kind of stuff? So indexing a lot on sort of the intangible, but tell me the right crisp vision, and then I'll put my money if I embark on that vision versus the institutional capital, it's kind of almost the opposite. Is I'm not too much embarking on a vision. Is let's make sure this is not going to blow out of the water and then make us look bad because the boss or whoever is allocating that kind of capital needs to continue allocating. It's almost a budget negotiation internally, as I see on the institutional world, than it is about let's seize and maximize the opportunity to really drive change. Would you concur?
Yes, and I think these type of managers of pension funds or sovereign wealth funds, or they don't see themselves tasked with, like maybe some of us do, of really driving impact as well, driving a change as well. Often they're specifically institutionals. It's purely financial metrics, huh? And they have the choice to go with your unproven team in theory, or somebody who is with fund number 4 or 5 and is consistently delivered. Yeah? So you got to justify it, and it's not an easy justification. Of course,
That's
everybody
true.
knows emerging managers tend to perform better than the rest. Yeah, first funds tend to have quite a strong performance. But yeah, how do you ensure that this is the right team and this will continue to be the right team also for fund 2 and 3 and 4? And you don't just have a lot of arguments going for you. That's the hard reality. I mean, you are in the beginning, you are a beggar, yeah? And you have to, yeah, try and convince with your strategy. But the argument of we need to do this for the planet, we need to do this for future generation, that doesn't really
Doesn't
work
strike
so well.
chords. It's not a
Yeah, I
selling.
mean, yes and no. I mean, I also say people always ask me, "Hey, why now?" I mean, we've been knowing this problem for a long time. With the whole issue of um, global planetary health is not a new issue. Why does it work now? My answer to this one is actually the fact that now the people who are managing and allocating the assets are actually of a generation that's been born with the problem and has heard the problem since day one, since, let's say, the first Rio conference, yeah, in '91 or somewhere, whatever that was, in the beginning of the '90s, I think. So since then, they've been hearing that there is an issue. Of course, nothing has happened. Kyoto, Paris, and so on. Not really anything has happened. The problem's getting worse and worse and worse. But they're now sitting at the front and allocating the assets. And I think that makes a big difference. That they actually understand the problem. But previous generations, they didn't even understand the problem. They said, like, "What's going on? I mean, all our wealth is built on this. What are you proposing here?" So I think that's the reason why we're seeing this trend now.
Yeah. So last question on the institutional side is: would you recommend people that want to start new funds to go down that path? I mean, let's face it, it's a long and windy road. We all kind of burnt ourselves a little bit. There's a lot of learnings, and in a way, warehousing, creating a very tiny structure, is to attract capital from the lower stack in that value. The capital stack is probably easier to develop your own track and then make sure that's the right fit for for you. Would that be your recommendation, or institutional money needs to be part of the mix?
No, I would never say that. I think it depends a bit on the individual. To be honest, some people have an amazing network of individuals around them, able to pull together. I think we're also seeing some other approaches, what, for example, carbon equity does, trying to really
Hmm.
pool smaller pockets, like everyone's money into climate. I think it's an interesting approach. Also, quite tedious, I imagine. But like I said, this is for me the approach: how to make this a normal standalone asset class, that just is an alternative to investing into a normal whatever index fund. So I think that's one. But whatever, it depends. To be honest, depends what your background is, what your story is, what have you done before. If you're really going out for the first time and you can avoid, I would avoid. But yeah, it depends what your background is.
And one of the carrots that Extantia is using, many other funds is the concept of Gigacorn. And so you put on your LinkedIn, and a lot of Extantia guys do, as Gigacorn hunters. So what do you effectively? How do you effectively identify a Gigacorn? What does that mean for you? And it makes it sound like a Pokemon game a little bit, where you're throwing your Pokeballs around. So how do you identify a Pokeball, a Gigacorn?
Yeah. That was the idea, to be honest. You know what the panda is for WWF. Create that kind of similar animal that people can relate to easily. Um, to be honest, nowadays I'm struggling a little bit with the gigacorn concept because it kind of leaves out a couple of concepts. But let's say first with simple idea. I mean, it's a company that has a unicorn valuation, but solving a gigaton CO2 problem. That's where it stems from, right? So what I mentioned earlier on the concept of you have to be a very successful company in order to really be a big part of the solution. Yeah. So that's where the gigacoin comes from. What it does not entail, and that's it's like a little bit maybe the problem with the concept is time. Yeah, and the consequence of that too. So, but first of all, time. What we apply, besides size and profitability, there is when does the solution actually come to market, and what's the embodied carbon actually to get it to market to. So a solution which takes until the year 2040 or 50 to finally become effective doesn't have the same value of the solution that comes in effect today. We call this a time value of carbon concept, something we could rigorously apply in all our investment decisions. What you end up doing then, well, we end up at least doing, is when we take, okay, we want to see large scale, we want to see fairly fast results. We come to two conclusions. A, it's mostly hardware. Yeah?
Mhm.
Software, it does not solve this problem. I always say CO2 is a molecule. You can't blockchain it away. Yeah? And the other thing is it's about retrofitting. We cannot afford to build a whole lot of new infrastructure. We need to be able to retrofit our existing infrastructure, leverage it as much as we can, and avoid a lot of new builds. And new builds is also nuclear, it's also fusion. These are all new build infrastructure. So we need to see how can we use today's infrastructure as efficiently as possible. And that already guides us quite strongly in our investment decisions. We have our Professor Pomponi, who's the head of carbon math, who always reminds us of this as well. By now, we've got the sort of thinking quite well ingrained. But often the biggest chunk of carbon is consumed in the construction of something, and not so much
Mhm.
in running or maintaining or even decommissioning something, like a car. The biggest carbon consumption of a car is the fact that it exists. Yeah? It's been manufactured. So the moment you drive it off, no matter if it's electric car or diesel or whatever, it doesn't matter. The first big chunk of carbon you consume is when you actually buy the car. So rather than buying new cars, drive the old one as long as possible. Yeah, that's a climate saving, and not switch EV every 2 years. Yeah.
Did I get that right? Does that mean that you do not invest in new build or new processes or trying to completely change the construction process?
No, I would not say it's 100% like this. For example, in the built environment, we talk about that. There needs to be new buildings. We cannot retrofit all of them. As we're a growing population, it doesn't work. It might work in certain countries, but definitely not globally. So there will need to be new build. There is also some infrastructure which is not worth maintaining, but it's a calculation you need to do. You simply need to do
Mm-hmm.
what's the best way to do it. That's what we do with our what we call carbon math. We look at the problem, and we also look at we project it into the future as well. Of course, so we say, like, for example, an innovation that primarily depends on energy efficiency, yeah, that this and consumes less energy, but requires a huge build-up structure today. Is that a good idea when we consider that the grid is getting greener anyhow over the next decades? Yeah? And can we actually come to the point where where we sort of reach a net negative point, yeah, where this technology has paid back all its initial carbon debt, yeah, and is starting to become a net reducer? We have put this point to the year 2030. Any company is not able to do that before the year 2030, discarded. That's what I meant with the time value of carbon. But of course, that depends a bit. Like, the economists can pick the interest rate from a hat. That is also something you can decide for yourself, or the discount rate from the hat. So we have decided on the discount rate to be basically at this 2030 break-even time. But yeah, it that might differ from fund to fund. But for us, it's really of extensive nature that we take the embodied carbon into account. Yeah? And they exist in different stages, like I mentioned, in the origination, in the build up, in the maintenance. If I will take the car example again, I am buying this car, driving it off, then I'm driving, I'm using it, and obviously in that use, I burn some more carbon. It doesn't matter if it's electric or not. Depends on how you charge it, I guess, with electric. But you will have to consume new tires. That's another embodied carbon, producing the tire. And eventually, at the end of the life, the car needs to be dismantled and decommissioned and eventually put to shreds. That's also another bunch of emissions. So we have to really look at the entire value chain, and this counts for every project that we look into.
Now, this is a question I get all the time: is when you look at a frontier tech, something where we clearly like data and it's still very early stage, is it overkill to run an LCA or some kind of LCA or carbon math, and you're solely basing your judgment on the outside potential if it turns out to be true?
Yeah, exactly. I mean, we don't run LCAs for that reason. We think it's too much a picture of a point in time now. That's why we created Epic, actually, to sort of that's kind of projecting the future. So we don't run it. It depends a bit on the technology and the matureness when you're investing. In early stage investing, it doesn't tell you that much, the LCA. In later stage investing, it could be different. But yeah, typically, what type of emissions does a startup have?
Right.
What type of footprint
So,
does a startup have? Very small.
and a proxy of that is beyond LCA is how do you conduct a deep dive, right? A due diligence in a new sector that you've never explored before. It might have existed, but you have never, as a team, looked at, I don't know, sustainable aerofuels or green hydrogen. Or
Yeah.
how can you effectively run a due diligence and find out whether the founders are saying the truth about their cutting edge technology or not?
I mean, first of all, it also depends on the stage you invest in. We don't invest super early when there's just an idea. We typically want to see a scaled prototype. Yeah. So we typically TRL 5 is our sweet spot when we invest. And because, again, we're not the better scientist, we're not the better engineer. We need that to be covered by the founding team. Yeah. We need to have a lot of faith that this team is capable, based on their academic or other track record achievements that they've done. And what we do is we help a great team with a great product build an excellent company. So we're here for scaling this technology and making a commercial case out of it. So whenever we feel that we don't understand what's going on there technology-wise, it's simply too early for us, that we don't invest.
Mm. That's a good proxy. Go ahead,
Yes.
Sebastian.
Yeah. It is like this. So, and sometimes you, of course, things out pan out quite differently. Companies pivot, the market changes, and so there's still a lot of things you can't foresee. But the majority of the risk that we take at this stage is a scaling risk, and not so much a technology risk. Also, maybe one thing that's special about us is we don't invest into any business cases that require consumer behavior change. The things we invest into are proven markets, or would I say companies who solve the trilemma. The trilemma is the ecologic viable, the economic reasonable, and resilient solution. All three at the same time need to be met. Then we're investing into a market which is gigantic, which is the energy market, the largest market we know. So, but that's something that all of the solutions that we invest into need to address. Consumer behavior change, you can't be lucky. Who would have thought that we'd like to write text at 140 characters? Nobody knew, but all of a sudden it's a thing. But the same counts, do I know if the consumer prefers to eat insect-based food or lab-grown meat? I don't know. This is all a lot of consumer behavior changes that we find very hard to predict. I think there's other funds out there who are better at that than we are, but for us, we're quite simple. We look for these trilemma solving solutions, and then we have no doubts about the market.
That's a good mental framework. And is there, because climate tech, I often get asked people that want to join this crowd and this ecosystem saying, I don't have the skill set. And the truth is, it's so new that we're all learning by doing. We're figuring it out, whole hacking it. And that means that we are shattering our beliefs sometimes. Is there any core or fundamentally belief that has changed since you've started this fund? Anything that comes to mind?
Many, too many. Yeah, no, for sure. I mean, it's not always. First of all, it's not always the best technology that wins. Not by far. You have to have the right political tailwinds. You have to be able to confront lobbies from the other side. Often, funny enough, the lobby is not just the bad oil and gas guys, but also people who are existing in the industry of renewables, for example. Yeah, your wind and solar guys are also defending their turf quite hard. Against other possible good solutions, but it's capitalism at the end of the day. And it's definitely not always the best solution that wins. Yeah? So there's a lot of things that need to come together. And as an entrepreneur, you have to really combine three major traits in yourself. Yeah? And they're also opposing at times. On the one hand, you need to be a great scientist to come up with the idea in the very first place. You need to have some type of novel thinking. Yeah? Then you need to be a great engineer to help scale it, and you need to be a great entrepreneur to actually help to finance it. And three different hats changing from time to time, but you have to be able to wear all three of them. Those who are only great scientists or only great engineers tend to fail. Of course, you can also replicate these three positions in a team. It doesn't have to be one person, but then if you are a founding team, you really need to look for diversity of thought in your team. Three great scientists don't make up a great company.
Well, you need a good storyteller, someone who can tell the narrative.
Yeah, able to simply communicate. Yeah, able to tell a story, like you just mentioned, tell a narrative, is so crucial. It's so crucial in simple words. Make a complex matter simple. We've seen this with companies that we've invested in. That when they initially came to us, I want to say you were lucky you met the right person, because we were looking into complex matters. But I know that they spoke to other investors before, some mainstream investors, and they also don't know what they're doing. Yeah? A very complicated machine does something really amazing, but really can't tell if this is anything viable. When in reality, it's really interesting breakthrough technology, and but they wouldn't have been able to actually sell it. They needed some help, and we were in this position to help in this case, and really got the company on a great commercial traction now.
Yeah, I completely concur here. I mean, I often come across scientists that just don't know how to sell their business, and it's a shame. I think it's an underappreciated role, that salesmanship. Someone who's gonna construct a narrative around and tell the crisp vision, how it's going to pan out in the next 5 years, 10 years, 15, and why investors should invest now.
It's critical. It actually really is mission critical to be able to tell that story. You need, specifically since you know that you need to fundraise a couple of times in your life, and then you need this skill. It's really crucial, and it sets the good ones apart from the bad ones. And if you have to focus on one skill, that's a key. Of course, I mean, you can be as good of a salesperson if the product doesn't meet the market. If it's not a trilemma solving solution, you can sell whatever you want. Things need to come together.
There you go. It's said, mission critical skill set.
Yes.
And so let's say, I wanted to switch gears and talk about the other kind of side of the community building element, right? You mentioned on the kite surfing side, but it's very applicable to climate. And this is kind of what I'm hoping to develop: more community, more bonding, more collaboration. And you're one of the first creators of Super Climate. I just wanted to get your thoughts on where do you want to take this? Do you think this is here to scale, to be replicated in other cities? And what format do you have in mind? And maybe a bit of
I have
context for
some
people that
news.
don't know.
I guess I have some news to share with you, John. You haven't told you yet. So
Ah,
let's make this exciting. Yes.
exciting.
So, I mean, first of all, how was this born? And it was actually similar born to Extantia. It was born out of frustration and conviction. Yeah. Similar concept. Frustration, us buying, and you were part of that early gang too, right? We were buying expensive tickets, a super return, but actually nobody wanted to talk to us. The institutional capital was not yet ready. And we thought, okay, that's kind of why don't we create a side event where we invite people that actually want to talk to us, that actually are interested in what's happening in the climate space. And we did that and had a sort of a first quite small gathering, like 30 people or 40 people. Repeated it. You joined the next edition. And that was quite a bit better. We had like 70 or 80 people show up, and it was a good gathering actually. And then we sort of started to grasp the concept already. There's actually a couple things that are happening here. On the one hand, it's GPs meeting new LPs. It's also having a time to connect with the existing LPs. But it was also GPs meeting GPs. I remember the second edition was really nice. We went afterwards for a drink and had a really good time. Sort of fostering that community there. And of course, also very important, LPs get the time to talk to each other, and exchange their views. So we thought, okay, this is actually a little bit of an interesting format that kind of fulfills multiple needs. Hence, we did the third edition this June in Berlin, and that was quite successful. We had over 200 people show up and kind of crowded house, and I think 4.5 trillion US dollars assets under management in the room. So obviously that kind of big capital showed up. And interesting side story, they also didn't want to go any longer. It was initially planned like a 3-hour event, and at the end we had to chuck out the big insurance company, say, guys, it's closed now. So that's good. I mean, that's a great testament to how the market has developed, but also how this need, how that kind of meets the need of community. We sort of call it a bit of the home of that new asset class. And as such, we actually got quite a bit of demand now on creating more of these events. So one I think we can announce already is that there'll be a super climate event next to Super Return New York on November 7th.
Okay, well,
Yeah. And
nice.
there is...
Going international.
Yeah, we had quite a few US funds already in Berlin. Yeah, and they obviously wanted to do something. They were the driving force behind this now, to do something in the US. And our fund portfolio is quite US heavy too, and sort of they also had questions around this. So we're preparing something quite exciting for New York. Actually, so it'll be really good. Already quite a bit of buy-in. I think this week will be the official announcement, but I don't know when is it airing.
In 2 weeks, so maybe it's
Okay,
going to
so
be late.
I
But
think it's going
this
to
is
be after.
timeless.
Yeah, okay, this time that's okay, but fine. Then it'll be already announced in 2 weeks. And we also have plans to do something during COP, which are not yet fully ready yet to
And what
talk
about
about.
the
But
future for the Berlin chapter? Is it going to be a full-blown event or just kind of the same structure?
we are discussing that at the moment, to be honest. What we see is that we need to professionalize it. We need to do something, and it's currently been run out of the marketing departments from Planet A, Revent, and ourselves. But it's now it's with multiple events around the globe. We see that probably like 3, 4, maybe 5 events a year. We need to do something about that. We actually were supposed to meet today to discuss it, but I couldn't make it today. So we'll discuss next couple of days.
Nice. Well, that's exciting. I tend to like those kind of niche events, under 400 people, where you index on quality interactions. People know they're in the room for a reason.
Yes,
And
and that's part of the secret sauce as well. Also, this informal correct character that we had always at Super
yeah,
Climate. That it's not just another conference. People are, getting so many conferences. This is about making meaningful connections. And then one of the things how we ensure that this is not just a whole bunch of hungry GPs sitting around 5 LPs.
hmm
Is actually by reversing it. We said everybody who wants to be a co-host needs to actually bring 2 or 3 LPs. Yeah, that we have always more LPs and GPs in the room. Yeah, that makes it for the LPs definitely more enjoyable. Yeah, they get time to connect to each other, and for the GPs also good because it actually means there's quite a big pool that they can get to know, of new people. But it requires a certain openness and willingness to share in that community of climate tech funds. I mean, we are very transparent and open. We have an open invitation list. Everybody gets to see all the contact details and everything from everyone. You know it. Yeah? So we've always maintained that level of high transparency, high trust environment.
That's awesome. Yeah, keep up the great work there. It's awesome. We need more of those events. And Hempus with Pale Blue Dot is doing the same with the drop. And so we see more of those events emerging. Really great. And so kind of final question for people asking whether the game is set. From the outside, it looks like now it's getting competitive. For dollars, we're definitely in a bit of an extended winter. And is there still room for more emerging fund managers, more funds? Or do you think the game is set, at least for a while? What's your views there?
I don't think it's set. I hope it's not set, but I also don't think it's set. Actually, like I said in the beginning, I think we see more and more institutional investors building out these pockets for Article 8 and 9 funds, and that would mean that significantly more capital will flow in. If we take Super Climate as an example, it went from 30 to 200 people in 3 years, and I think that's also like a testament to the market in general. It's still infancy. It's still early in the game. We don't have nowhere near the capital required to meet our or anywhere any goals. We don't have all the technologies developed yet that we need to really run a whatever hydrogen or nitrogen based economy or something. There's so many question marks still open. So on the same time, that's the early stages. On the same time, we also need a lot of capital deployment. I think there is quite a bit of capital deployment, but it actually the deployment capital is kind of sitting on a bit of a dry powder, not knowing how and where to invest this pile of money that they sit
Yeah,
on.
that's another topic. There's been a lot of raised capital. This capital is not being deployed as fast as people expected. Most people probably wondering whether we're gonna go through a really long valley of death, or whether the things are going to pick up. But the urgency is real. The 2030 agenda for most corporates, for governments, is there. So
Yes.
the money, I think the tap will continue getting open, and it will flood the streets of climate tech, in my opinion.
I hope so, and I hope that we get to see more funds, good fund managers coming aboard. I think there's some specific needs in the market without getting too technical now. I think the Series B plus funds
Hmm.
are at the moment there's opportunities there, or
True.
uh,
More growth
yeah,
funds
more like a growth fund.
available.
Funds, of course, very hard to raise without a track record. um, and the traditional growth funds also don't tend to apply. We see some few going that direction, BlackRock, for example, or Partech. But that's not enough. That's two funds. Yeah, we would need a lot more of those. So that there's an opportunity there, I think, to build funds in that direction. But it needs the right teams to really be able to pull this off.
Yes. And you and I will continue collaborating, exchanging, sharing ideas, diffusing knowledge, so that the
Absolutely.
ecosystem can continue emerging.
Yeah, I'm
Well,
excited
I think
I'm excited about what you're doing now, Joanne. So, like I said, you've been on this journey pretty much since day one. So,
yes,
hope we will continue to collaborate.
role is changing, but the journey remains the same, right? So this
That's
obsession
good.
to solve climate problem is going to keep us busy for the rest of our days.
Yes.
So we should do a check in a couple of years. We will have a lot more data, and hopefully, super
Yes.
climate will become one of the central nodes in the network. But thanks so
Let's
much,
see.
Sebastian.
Yes.
It's been awesome. Good conversation. Super
Thanks a
insightful
lot,
to follow
Joanne.
your journey. And to you all, thanks for tuning in. As always, ciao.
Thank you, everybody. Thanks for listening. Thanks for having me.